All right. All right, guys. Do you have any questions before I start, or I will start? I'll start with what has happened so far and what I am expecting in the near term.
No, sir. You can
All right.
start with something.
All right. All right. This is SPX. So let me expand the fibs. So this is the SPX chart, SPX chart, S&P 500, the index. So I did not expect the market to go all the way to 50%. I mean, I was expecting it to go to the 50% retracement and come down a little, which it did not on Friday. That could be, well, right now, I do not know where the market is going. The only thing I know for sure is that it did hit an important inflection point, which is 50% fib, and it did not close above 50% fib. So right now, I do not know what's happening. I mean, we'll probably get more information early next week, I think. Okay. This is my ES continuous chart that I use every day. So on Thursday, it went up. I thought this would be a double top. I thought it would be a double top, but it's not. Hold on, guys. Okay. All right. So, but Friday was a bullish day. I mean, it went all the way to the RTH high, which is Wednesday's high, and it bounced back, which is kind of bullish right now. So, but it did not close above the 50%. 50% retracement. Did it? Oh, this is yes. Not in SPX. Well, I when it comes to retracements, right? I follow SPX mostly more as more important metric than ES because this is a continuous chart. So it adjusts every month based on right now the high is shown as 3364. Once this moves into the next month, this number will change. So this is a continuous chart, but in SPX, as I showed before, we haven't moved above the 50% retracement yet. So this is what I'm looking for. If the market moves sideways, that is going to be very bullish. If the market goes lower and this level, not even this level, I think it's in ES. I didn't put it here. Yeah, this is the breakout level, which we had last week. As long as the market is above this 2628, I cannot be bearish. I got some puts on Thursday, expecting the market to go down a little bit more, but it filled the gap. This was the gap. This is where it opened, and it filled the gap and it bounced. So obviously that is a bullish sign. But there are certain, last week being a short week, and Thursday being the last day of the week. We don't know if this bounce really means a lot or not. We'll know that, early next week. But if this breaks and goes lower, I would want to be careful being along. Oh, I see a chat. How important are overnight lows and highs? Well, it is just another level. Generally, if it is a bullish market, uh, then well, this is not a bullish overnight move. If it is a bullish market, it would go straight up, and the overnight low would be higher than the RTH high. In that case, the market would go higher and come back and test the overnight lows, and then it moves higher. That's, I mean, everything is just a level, okay? However, the one thing I always watch is whether the overnight was more bullish than the previous day or not. Based on that, we have the levels, and most of the times, as we as we trade in the during the day, we when we watch these levels, we will know what's happening, right? I mean, well, as the market happens, you know whether it's bouncing off of certain level or not. So that's for me. Other than the you know fib retracements, which are for the long term, other than that, everything else is well. I mean, well, we are going to talk about uh, which is more important anyway. But I mean, for the short time day trading, every level is just that. It's a level. If it bounces off of it, you go long. If it breaks down, you can go short. That's it. How do you determine a breakout level? Any resistance. For example, right now, this is your, well, let's make it a daily chart. So this is a breakout level. See, market went all the way here and it came down. It closed lower. Okay. Next day, it tried again. It went up, but it did not breach that level. So that is still a resistance. This level is still a resistance for these 2 days. Okay. So the next day, when it breaks this level, that's a breakout level. It means that whoever is short here, they are going to either cover, and all the longs are going to start buying above this level. Vice versa works on the other way. Breakdown level. So anyway, let's figure out what to do next week. So if the market moves sideways, okay, actually the SPX is probably a better one for this. If the market moves sideways, okay, it is bullish. Anytime market moves higher and moving sideways, that's bullish because there are no sellers. Anytime market goes higher and it starts moving lower based on the levels. So for example, for this move from here to here, I don't have the fibs, I'll do it here again. So these are the fibs. Okay, so these are the fibs, right? So it's the other way around. This is supposed to be 0. This is 61. When you are looking at the retracement, so this would be your 2580 would be the level for me to be bullish. I mean, in terms of Fibonacci retracements, it could come all the way to 2500 and then still can bounce, and it can still be, and it is still bullish. Right now, for early next week, what I am looking for is whether market moves sideways, down, or higher. If it starts moving above the 50% retracement, the next one is 61. And even though I said I sold half of my long-term portfolio, I will probably start adding some long-term options initially, call options. if it starts moving higher. Mostly with the, I will probably start with IWM. We'll talk about Russell very soon. So the idea is to buy if it breaks above the 50% fib. If it goes lower, I'm gonna wait to see how long it's gonna go. But I mean, I don't have to trade the indices, but I will trade the other stocks based on the relative strength. We'll talk about the relative strength about the Tilray Kareem was asking about. So that's what I have the plan for SPX. But so far, it is bullish. I don't see anything that's bearish at all, especially because it did not close at the lows on Thursday. So, well, as I say, every day we get a data point, and based on that, we'll figure out where the market is going. So that's about SPX. So Malay was talking about IWM, right? Okay. When IWM or the Russell, when the market was going down, Russell was the one that going down the most. It was the laggard, but it was the leader on the way down, and that's exactly what's happening on the way up. Well, in the last few days, if you look, one of the other reasons why I'm so bullish right now is because of Russell. Russell is catching up. If this coronavirus is a bigger problem for this country with everything that's happening right now, Russell will have the most impact, because all the small businesses, most of the Russell are American based, I think, and most of it. And if anything were to happen or things would get worse, Russell would be the one to fall down first. And the divergence I was talking about on Thursday, that Qs were not doing so much, but SPY and Russell were doing well because materials and utilities, and also what else was doing good? Financials were doing good. That's the other thing. KRE, it's the regional bank ETF. It did really, really well. They are supposed to get hurt the most if there is a recession. Well, I think technically we are not in a recession, because we won't know until another 2 quarters. So, but what I'm thinking right now is, if the market goes any higher, I would be a buyer of IWM and KRE, because they are the ones that has to catch up to the rest of the sectors. Right now, IWM has retraced only 38%, but it stopped right there, did not breach. So we are still at an inflection point. The same way as is QQQ. Actually, QQQ is has much more strength, because it went down less than SPY and IWM, and it started retracing back much earlier than the other two indices. So that's about these. And also, the one other thing I always watch is SMH, the semiconductors. They have to do better. They have to do better if the QQQs are gonna move higher next week. Well, I mean, there is a little bit of a sell-off anyway. That's actually a 60% retracement for SMH. Well, the zero is supposed to be 100 over there. No, let me show you. So this is almost at this is better than QQQ, SPY, and IWM. So this is a leading indicator. All right. like I got a few questions. How do you determine the better? Okay, how long? When you say long time, for all right. Well, probably 3 to 4 months, I think. Let's see. Probably July. July, I think July should be good. That's what I mean by long term. All right. So you think QQQ will pick up and move up? Well, that's the thing. If market is gonna, well, we'll know it, early next week. As I said, we are at an inflection point. So, but if the market is gonna go higher, this could have a gap and go. This is called gap and go. When it this is supposed to fill the gap, and it did, but it started higher, not at the low of the gap. It started higher and it went higher. It did not come down at all. So this could happen until IWM catches up with the other two indices, especially SPY. So that's what I'm looking for next week. Let's look into the questions that you guys asked. Okay, I'll read these questions anyway. How to identify when to come out after any quarterly release? I have difficulty in finding exit point. Whenever I exit, that stock moved up more when I wait for more time. Well, okay. If you have made a profit, this is my personal opinion. If you have made some profit on a certain trade, I would not worry about it. There is one way, if you want to bet more, is to roll those options. So, for example, if you have, let's say, 280 options right here, and if the market started going higher, you sell 280 and buy 290. If you want, get more time, go to the next expiration, and buy the take some credit. I mean, take some credit, take some money off of it, take some profits, and roll it. That is the best thing you can do. And nobody knows when the market is, or even for a stock, right, where it is going to stop. The only thing we can do, the best thing we can do, is figure out a level and stick with the plan. Believe me, even me, I have it. Actually, this comes with experience. The more you do it, the more comfortable you're going to get. We were talking about CLR the other day, right? So I used to trade CLR a lot before. So I'm more comfortable with it because I know how bullish it can be when things work out. So was it on this? Yeah. So when this was my support, okay? It went higher and then it came down, okay? When it came down, I got out. Again, it went up. I wasn't sure. So again, it came down and it went. So actually, anyway, this is something you should always look for. It's called higher lows and higher highs when in an uptrend. So every time it makes a high, okay, it should be higher than the high before that. Okay, that's the uptrend. As long as, look an hour. So for this one, this is a high, and it went down again. Okay, this is not a new high. So I mean, always look at the swing highs and swing lows, and based on that, you figure out whether it's an uptrend or a downtrend. Right now, for this one, this was the swing high. Okay, now that's breached. It means this is bullish right now. As long as it does not breach 1098, it is bullish. And if you are long here, and if it breaches this point, you get out. That's it. And for the gaps, the reason I like gaps is because there is no resistance in this point, no resistance at all. So whoever are long at the start of the gap and it starts going higher, why would they sell? I mean, there is nothing to sell. I mean, there is no resistance they can see. So that's why it's like vacuum. It goes higher faster, and while it's coming back, it's the same thing. If there is a gap down, it's going to go down faster too. So here, this is the level where you would buy, and this is the level where you would sell for profit. But if you think this, and let's say if you sell everything here, and if it starts going higher, you could go buy it again over the top. Or what you could do is you roll it. So you roll your options. Yep. That's the only thing you can do. I mean, I have lost money whenever I was more complacent, thinking that something is going to happen for many years. Okay. Nobody knows what the market is going to do. The best thing we can do is have some levels and work based on that. And this actually gets rid of a lot of emotion that we think about. As let's say when the market is going down, the only thing that we are really worried is about our account losses or profits. But that does not mean anything, or that does not give you any indication of where the market is going. We could have wrong trades. So even if the market is going higher, we could be buying the ones that are going lower. That happens all the time. So that's why I always look for the stocks for relative strength. Well, let's talk about the relative strength. And this is mostly for day trading that I use, but this also works for trades for the next day too. Yeah. So this is what this is on Wednesday, right? Let's check. I don't remember when I did the till rate trade. Was it on Thursday or the day before? I think this was the one. Yeah. So Tuesday. So on Tuesday, it did not go lower much, and it started hurling back. So this would be the level 627. That's around, what is that, 1215. Let's look at what happened in SPY at that time. Well, my point is always compare your chart with S&P 500, QQQ, and IWM. Okay, and if the stock that you are tracking is doing better, so what I mean by better, let's say SPY is going down and your chart is going sideways, that's bullish. And if this is curling around and your chart has already made a new high for that day, high of day, that's what I talk about every day. High of day, that's when you get in, because as the market moves higher, the stock that you are in, it will move much more higher. So you always look for relative strength whenever I look for relative strength whenever I do day trading. And I have a list of stocks, I don't know, 120 or 130. So I have all those stocks that I have in my, in front of me. One of my screens is that entire screen is just stocks based on sectors and ETFs and all the positions that I that I trade, and also I have one list for outstanding stocks, or the ones that have much higher relative strength for a longer period of time. So the easiest thing is to pick the top 4 or 5 and put it on one of my machines, and then just Look at them for the entire day, and you will see if it has the relative strength. I mean, you could where it opens is more important than how much higher it open a certain stock open. Okay, let me rephrase that. So let's say a stock opened 10% higher, okay, and it started going lower. It means it does not have relative strength. It has relative weakness. Why? If the market is going higher. So the stocks that open up higher, if they are going higher from the open, that is something I would be more interested to go in long. Those are the stocks I keep, talking about every day, saying that they have relative strength against the market. I guess that's it about relative strength. Kareem, I think I might have answered your question. Who else? Let's see. Okay, double bottom or support with time. Okay, this is another thing. So let me check the chat. Okay. Well, I'll look into the questions in the chat in a minute. Let me finish the questions that are in the Excel. All right. So okay, ES auction. Well, auction is something I don't want to get. It is going to take an entire class, I think. I don't think we have enough time today, but we'll talk about the double bottom, the support with time. So what I mean by that. Okay. Let's look for. Let's look for Apple. Oh, I don't see anything here. Okay. we could take this one on, and this one actually worked well. Well, the thing is, whenever you have a support, which is much farther, let's say the market went up all the way here and it came down, right? So let's take this one. Okay. This was a breakout. Well, it's not really a breakout here. There is no resistance, but anyway, this was a support here. So market went higher. Okay, it came back. So when it comes the first time, okay, how far is it from the previous support? So it's 12.3, and this is what? 228. That's almost 2.5 months, 3 months. So if the two supports are so far away, there is a very high probability that it is going to bounce. So this support as a double bottom has more importance than something that would go here and come back and test right here. Let's say if it went here and came back to test this one, this motion or this movement in the stock, this double bottom would have much less support than this one. So farther the supports for the double bottom, better it is. So that is what I was talking about. So it went up, it came down again, in like what, 228. I mean, this is working for me. This could be hindsight, but what I'm saying is this support has less chances of holding than this one. This is the order of preference. So the farther the two supports are, the better it is. All right, let's look at the next question. Gaps, how many times do they fill? Well, gaps only fill once, but you will always look for the recent ones. So for example, this is a gap here. Not really, hold on. This is a gap here now, from here to here. So when it goes here, right, you don't see any resistance in this gap. Now this is a gap, okay? But once it fills, that is done. I mean, this gap is done. So basically, a gap is something during the daytime frame. It has to move through all the prices. If it does not, then you get a gap. and we talk about ES gaps every day. The gap that we were talking about, I was talking about. See, we had plenty of action right here, but not during the day time frame. So only the daytime, whatever happens in the daytime frame is considered a gap. So overnight it started here, and sorry, it does not matter where the overnight start, what happened overnight, but where did it open the next day, and is there a gap between the low of the next day to the high of the previous day? Not the close, but the high. So that's how we get the gaps, and gaps are filled only once. Once the gaps are filled, right now this is not a gap anymore. This is not a gap anymore for us.
So KP, would you look at, like, when you say gap, right? Like I see the gap, but is it the wick that you look at that it's filling, or is it the solid body? Is it the low,
No,
or is it the close, or is it the higher low of the candle? What do we look at?
we look at the entire candle.
Entire candle. So including that wick, right? Like the
Yes. Well, basically, hold on. Okay. So basically, what this is what auction is. Basically, what auction is that when the this is what the market generated information is what they call. So, well, I'm still learning how it works, but one of the things that they talk about all the time is everything. I mean, the auction should happen at each and every point. Okay, it does not matter whether it's a candle or not. We are not talking about, this is not a candlestick pattern at all. What we are talking about is whether market has been there and did the market accept that price or not. So right now, it opened here and it moved here, right? So market is ready to accept this entire prices without being here at all. So, but when it goes lower, if this is a gap, it is going to move really fast because there is no resistance, as I already mentioned. So, but yeah, it's about whether the price has been in that gap or not. That's the only thing that we need to look at when we are talking about the gaps. All right. Why do we hold our losers so dearly but sell the winners? That is totally, and this is something happens to everybody. This is something you have to go or trade for a while until you get comfortable, because our emotional state to figure out how much we could lose is not something that would come to us easily. Nobody wants to lose money, but if you are risking your money, obviously, whenever there is a risk, there is a good possibility of losing too. So as a I put down a few sentences about it, but if you work on the levels, I mean, before you get into a trade, if you figure out where to get out, that is kind of is more important than where to get in. If you I mean, anybody can buy anywhere, and if they make money, they would think that it's a brilliant trade because they made money, but that's not true. Even in a good trade, the bigger question is, are you getting in a place where you have very less risk? This is what I was talking about in the CLR, right? When it breaks out, when it breaks down, where to get out. As soon as this goes down, you can say, okay, this is not working, you get out. Again, if it goes up, try it again, but you'll probably lose less than 0.5%. In such cases, maybe 1% or 2%, in cases like a large, stocks that have a lot of volatility, you might lose a little bit more. But the good thing about levels is you know where to get in, and you will know when you are wrong right away. So if you keep looking, or sorry guys, so I'm reading these chat messages and it's distracting me. Anyway, so the best thing to do is follow the levels, and that will reduce your emotion a lot. Okay, and if you think anytime you are losing more, the best thing to do is make the size smaller. That's the best thing. Okay, the only reason that you would be more you have more panic about your trades is because you are trading larger than what you can take. So that's the best thing I can tell you. I mean, whenever my trading positions have gone down to 1/3 to half, while the market was going down. And also, whenever I trade any stock that has a higher volatility, I always do a smaller size because your risk has gone up. Whenever the risk goes up, I could make the same amount of money by risking less, but I could lose the same amount of money as my regular trade too because the risk is higher. So the best thing to do is, watch the volatility. And then one easier way to look at the volatility for a particular stock is average to range. Okay, look at that. The average move here used to be $1. That has moved while the market was going down. This has gone down up a lot. It went to $2. So your risk has actually is doubled from here to here. So that is something I watch all the time. And I remember somebody asked me about all the technical levels that I see. These are all the levels that I use whenever I want to look at something. So that's my default, but it has too many. But that's the 200, that's the 100, that's the 50-day moving average, that's the RSI and the Bollinger Bandwidth. So these are the things that I watch. I used to have also Bollinger Bands, but I don't have it. I moved it to, I didn't want to, make it a mess. So that's my Bollinger Bands. That's my 20-day moving average. This is my 20-day moving average, and this is 2 standard deviations average. So I have many studies that I look at. So, and the best way, the thing is, you get comfortable while you trade for a longer period of time. You get comfortable at trading with certain technicals. Okay, and technical trading is all about where to get in and where to get out. And believe me, I am learning to be more patient these days, and that only comes with longer. The longer you trade, the more patience you will get because you will know the mistakes that you are doing, and it is a very good idea to figure out the things that you are doing wrong every day.
KP, one question on the CLR, right? Like it filled the gap and it started falling. I know oil fell, so this fell, but is it like usually after they filling the gap, will you see a little bit of retracement in reverse direction, or is it just the case with this one here?
Well, hold on. Let me remove that.
Or like, do you always like, is it a good idea to exit most of your position once the gap fills because it's going to reverse?
Well, there is a no hard and fast rule. The thing is, this is how I think about anything that I do. So what is my pattern? My pattern is what is the pattern that I'm trying to figure out here? A gap fill. So you get in here, when it fills the gap, you get most of it you can get out. And it's not like it's gonna go there and die right away. I mean, you see, there are so many 15-minute candles. So 1, 2, 3, 4, 5. There are 5 candles that tried to breach, 1467, and it didn't. It means that this has been a resistance. No matter how you think about it, it is unable to move higher. So you had almost an hour a little more than an hour to figure out whether to get out or not, or else. Generally, what I do is I get out most of it here. For CLR, it was easier for us because oil was going down, and I wouldn't expect CLR to do better when the oil was going down. And then the reason we had this move lower is also because oil was going down at that time. So it's never one thing. So, but again, our idea is to figure out a pattern and, take profits when the pattern is completed. So as you were saying, let's say if it breaks out and starts to move higher, you get in here, and you will know if this breaks, you'll get out. That's it. And generally, this is, you can always look at how the market is reacting to the S&P 500 and Qs, or in this case energy stocks are doing. You can always compare this with OIH ETF or XLE and see how they are doing. Okay, so that's another way. Unless we are not in a bullish market, I didn't see why I would be long here. And in one of the other questions they were asking, what would you do if it goes higher? Yeah, if it goes higher, it goes higher. Either you get here or not. The one of the easiest ways to lose money is to be in every trade that works. It's not possible, because that is one of the easiest way to lose money. All right, we'll go to the next one. Dark pool, I have no idea. I think Ravi will probably talk to you guys when he comes back. How do you track so many stocks? Daily routine. Well, the one thing that I told you, right? After the market opens, I have the top stocks that are moving in my list. 3 lists that I have, I think I discussed this in our last webinar or 2 webinars ago, that I have 3 lists that are S&P 500, Nasdaq 100, and Dow Jones. Those are important, and I have all the lists of each sector. So I look at the ETFs, whatever ETF is doing better, and I go back to that list of ETF and see which stock among that ETF is doing better. And if it is a bullish market, that's where I want to be long, because it is all relative strength. The relative strength for that stock is better. That's it. So you go long on that one. And alerts. And whenever I look at any chart, okay, for this one, create an alert. That's it. You do alerts whenever you can. And this is like anything else, the more work you put in, the more trade ideas you will see. That's it. So, and okay, I think I need to change this into. Give me a second, guys. For the next question, I need. All right. All right. Share content. All right. So I started watching this one recently, but so that's a 2-year chart. So would I be bullish here or not? This is one of the indicators that tells me that I should not be along here, because there is more risk here than there was before. So on Thursday, there are only 2 stocks that have closed at a new 52-week lows. Okay, so that tells me that everything is going higher. It means there is more risk in the market right now than it was, anywhere here, obviously. So these are contrarian indicators. Basically, if it's, look at that, I mean, that's 68, and let me change this file. Let's make it two. Okay. So we are, in terms of bullish percentage index, we're all the way to the top. I mean, as if nothing has happened in terms of how many people are bullish right now. There are 68% of the market that is bullish right now. This is again a contrarian indicator. So when there are very less people who are bullish, and look at that, this is horrible when you look at this. And I've been sharing this regularly. In December 2018, this was the best indicator that told me that, okay, this is where you go ahead and start buying more. So these two are, actually this one, I just started looking at this for over a month or two. But this one, we have been following it for, I don't know, 3-4 years now. And this is one of the best indicators. Again, this is a contrarian indicator. What it means is when the market is when the bullish percentage index is higher, there is a good possibility that you're not going to make a lot of money in there. This one you can use for long term and also short term. But this, for long term, this gives you a very good idea of where you are in terms of market pessimism or bullishness. So, all right. Let's go back to Thinkorswim. All right. I mean, see, these indicators do help you get rid of your emotion too, because, anytime we look at our portfolio of, how much we have lost, that tells us, to do how we live in our daily life, be scared of it. But if everybody is scared, and if there are very less people who are buying, obviously that would be a better opportunity to buy than to sell.
So you're saying, like, because the bullish, the BPNY, it is at the top, you don't want to buy because everybody is buying?
Yes, I don't want. Those are the indicators that tell me that there is a very high probability that you may not make money rather than last 2 weeks, obviously. And last 2 to 3 weeks have been so hard for many people to even get in because they are waiting for one more downline, right? I mean, that's what we do. I mean, it is that's what any trader who is not experienced would think about is when the market is going down, he wants to wait until it goes down. And nobody knows when, or most of the time, you don't know when to get in at all, unless you follow these indicators that tell you how much there is pessimism in the market. If the market is, and this is a relative, hold on, let me share again, sorry. This is a relative chart, right? I mean, you can always look how pessimistic are we. Can you look at the BP NYA now? Hello?
Yeah, we can.
Oh, okay. So when you look at this, let's look for last 20 years. So look at that. This was in 2008. And how many times did we go there? I mean, here, I don't know, probably 6 or 7. So there are only 7% of the market that is bullish at this point. So, I mean, this actually gives you a very good idea of if you want to put in more money or not. So, and these indicators, we don't know what happens right here, what's the next move, but if we are wrong, we can always get in. So and I'm not gonna put all my 50% of cash right away. I'm not.
And even you're picking the relative strength even in that condition, right? You were just not picking everything. Like, I saw
No,
you were,
I
you're
don't.
still picking the right ones. So,
Yeah, well, okay. The relative strength also works in two ways. Uh, so, for example, let's look at the let's look at let's look at the home builders recently. So, in these, I mean, actually, we can talk about UAL anyway. So, if you look at that, if you look at this, when the market was right, this is where we had the trade, right? Everything went up except these. So the one reason if the market is bullish, airlines would be the last one to move higher. But when it moves really fast because there will be a lot of short selling and also buyers at the same time because they don't want to get caught. Short sellers don't want to get caught and buyers want a cheaper price. So, but for the long term, I wouldn't want to be in airlines. Not really. I mean, because this is not the first one that is going to make the most money for me. I would probably go for a sector or a stock that is doing so much better. For example, Vertex. Look at that. I mean, does it look like we have been in a correction? It's not. And these are the stocks I keep talking about. AMT, it hit a new high, and then this does not look like we had a huge correction at all. I mean, even though you see this, but it bounced right away. So the relative strength on these, this is actually better for me to get in than other stocks. Of course, there is always exceptions. For example, Zoom or any of the stocks that are doing better because of the virus. So those will be sold off because when the market didn't know what else to buy, they bought all the stocks that are doing better while there was a crisis. So when the crisis is over, or getting when the market is getting better, people will sell those and buy these. That's exactly what happens to Costco. I remember we were having this conversation. I mean, I sold Costco here or here, and I'm like, okay, this is good because what is the risk for me here to be whether to be in Costco or I got in Avago. Obviously I was lucky, but Avago went down what 330 to 150. It went down 50%. Okay, and uh, Costco was right here. I mean, how much of the move can I expect? So this is how anybody would do. I mean, they would want to sell the ones that have already done better, and they want to get into ones that have done really really bad, but that are good for the long term. I mean, I'm sure a lot of and especially Avago, their dividend is high. Uh, and I mean, you could always look at the kinds of investors who would be interested in Avago would be a growth stock. Avago could be for the dividend investors. So the more the number of positive attributes are there for a stock, you would probably prefer that. But again, this was my 61%. I posted this to 261. That's it. I sold at 261, but because it came back to the 61%, and also that ended up to be one of the major resistances. It could go here. It could even go here, but I have made the most of my money. So if it goes higher again, I'll think about it. And also, most of the times, what happens is this is where patience comes in. It goes higher and comes back and tests the 264, and then it will move higher. There's, but we have so many stocks in the market. So, all right. Where is the list again? All right. Okay. MOC data, public info. Okay. So this is something called Trade Flash. There is a guy, I forgot his name, but he actually sends a lot of information every day, and one of them is MOC that he sends. So I forgot his name. He's an amazing trader. I was with his subscription for about 6 months, I think. It was in 2011 or 12. Uh, well, the one thing about, a bunch of subscriptions I have taken over the years is that you learn a little bit from everybody. You will never be able to mimic what they are doing. That's my belief. But you will come up with your own solutions to the market that you are more comfortable with. Because one main reason is because everybody has their own risk profile. So, all right. Next, stocks that are disconnected. This is something that that I watch. Certain stocks when you watch, you will see that kind of buyers in certain stocks, and Etsy has been one of them for many days. What I have seen is even when the market is totally going down, when Etsy starts going higher, it just goes higher. It doesn't care where the market goes. I and I have no idea why it does that, and I do not care why it does that. As long as I know I have a plan that okay, this has done better previously. Okay, while the market went down, this will give me more confidence in going long, even when the market is going lower. So this is something, I write it down, stocks like these in a book saying, okay, this thing is totally disconnected with the market. And also, Tilray is one of them. Right now, these stocks, when they go up, they just go up. It does not matter where the market is going. When they go down, it does not matter where the market is going. It goes down. So, and then recently, and then certain things, you read about, like, looks like one of the ways all the governments are going to, government are going to lose a lot of money because job losses means less taxes, less money for the government. And looks like a lot of governments or a lot of states are going to, make cannabis legal because it gets more money to the state. That's it. So, and, some of these facts, more facts, whenever you see that in the price, it encourages you to get in. So that's about stocks that are disconnected. When do I add to current position? Well, this one that I was talking about, UAL, one other thing, right? It started higher and it started going lower, and when it closed the gap, I expected the gap to stay that way. Oh, I can't remember when that was. Is this the one? No, I think this is the one. Yeah. So anyway, this one. I'm not sure. I don't remember. Sorry, guys. But the thing is, some of these things, the gap rules, and also where the stock is with respect to the market, and when a stock opens higher and you get in, and the stock is going lower, not because that the stock that you have chosen is going lower, it's because of the market. When the market starts going up, this will probably go up much higher, because even though this is going down relatively, it is doing better than the market. That is also something I look at. And what we have seen is airlines, they had a small bounce. I mean, when you compare it to anything, airlines are still at the lows. And I was talking about the banks too, right? Look at JP Morgan. It was right here, and you had this whole move that could happen while the entire market is at the highs. It already broke this, but JP Morgan was still here. So even though these stocks have lagged, this is basically a catch-up trade. That's exactly what's happening with IWM, as I was saying before. IWM is now catching up to QQQ and SPY. So if, again, there is more reward in IWM than SPY going forward if the market is going to go higher. And if the market goes lower, there is more risks with IWM too, because it's going to go much lower than SPY or QQQ. Because relatively it is weak, but on an uptrend, it is going to move much higher because it has to catch up with SPY and QQQ. I hope that's clear. What are the key? Let me see. Oh, a bunch of questions. Hold on. What are the key parameters considered to run option scan? Well, I don't do any options. I don't run any option scans, as I told you, right? I just explained. I have alerts all the time, and I look at the relative strength, and based on that, I trade. And the other kind of alerts I always keep is an alert for a trend line. Create alert with drawing process. That's it. Whenever it comes and whenever it touches this line, I'm going to get an alert. And if it starts bouncing, I'm going to go long. So alerts are the best thing that we can have while we do our research. Because it does not matter how many monitors we have, we cannot watch all of them. So. All right. What's next? Okay. What are the important levels or order of importance? So, well, I wrote it here in the Excel anyway. The price is the most important, then the trend lines, then the fibs. But there will be plenty of occasions where you will have a coincidence of all, even two of them. I was just showing you a while ago, right? So your 50% fib is at 61%, 61% fib is 264, and also your price is also. So this line is more important than, I would say, this one. Well, in general, this has more importance than this one, but so Manjunath raised a hand. Manjunath, just send a message in the chat if you have.
Yeah, sorry, please go ahead. Yeah.
All right. So this obviously has this is where the confluence of both of them are occurring. So this level is obviously more important than anything else. So and these things happen all the time, that the price levels and the fibs coincide a lot of times. The more you chart, the best way to go about it is to chart all the time. That's the best thing to do. The more number of charts you chart, the better you get. And also that, as I said, this will help you with your emotion, because you will see technicals. The more number of times you see technicals are working for you, the more confidence you will have, and the better trades you can be able to do. All right, what else? I think I already okay. No, we have a bunch of them here. SPY at 50% fib versus Microsoft at retail stocks at lower fib than market. That's what I was talking about. The thing is, for this question, SPY at 50% fib versus Microsoft at 61% or RH at 26%. Well, I don't really look at the 27 or 26 or 27% and also the 70% something, because that's too many flips, and I generally don't chart all of them. That's way too many. So, but anything that anything that has not went up will go much higher in an uptrend, and whatever if it is a downtrend, they are going to go down much lower than the recent lows. So that is something to remember. That's it. In such markets, oh yeah, long term. Okay, long term. How do long term investors see value in stocks? Well, I don't really. I'm not much of a fundamental analysis guy. Okay, the only thing I watch is how everybody is buying. That is based on relative strength of a stock against its sector, against the market. If it is doing better, I get in. Because fundamental analysts, if they are wrong by the time they know, it's going to be too late. So that's my opinion, and that's how I trade. So I see a lot of stocks with strong EPS growth. Those things. See, stocks with high EPS growth, good profit margin, low price to book value. If these are all true, they will all be reflected in their price. Okay, and if the entire market thinks that even though the PE is low and the market is not buying it, it means something. There is a big disconnect between how people are buying versus how their fundamentals are. So I don't want to be in something that is going down, hoping that it might come back when the market realizes its fundamental, thesis. So what else? Okay, that's market. Okay, with low interest rates, what can we expect from bank going into earnings? Well, again, for me, I barely trade earnings. My, what I have seen is if it is an uptrend market, okay, all the stocks will do good, and if the markets are good, obviously banks are going to do good too. So right now, in this uh, coming earnings, there is a good possibility that the banks are going to say, we have no idea how this is going to end. And if you have seen the JP Morgan CEO saying recently that I am not sure how all the banks are going to pay their dividends with this crisis, and they are the biggest bank, and they are saying they don't know. I don't know how all the other banks are going to manage if they can't. And and this is something for you guys to look into. Net interest margins. So basically, what it is you deposit your money every month, your paychecks or whatever, and bank gives that as loans to other people, and they collect, whatever the difference between whatever they are paying you to whatever they are getting paid, right? That's the net interest margin. So when the interest rates are lower, that margin becomes lower. The lower the margins become, the most of the money that they are supposed to make is not they are not making. So obviously that's not good for the banks. However, on Friday, Fed said that they are ready to buy $2.3 trillion worth of, invest in the banks to buy up any loans for small businesses. That was a problem until yesterday because, well, as I said, I don't always follow, the stories, but I read it. So the people were saying that what if the banks give them the loans and they declare bankruptcy? Now the Fed is saying, don't worry about it. So that's why we had that huge move for the banks on Friday. But again, look at the levels based on the level. That's what I do. It does not matter what the thesis or the fundamental analysis going forward or how it's going to be in 6 months now. I don't care. As long as the price is moving in the direction of what I expect, I get in. If it's not, I'm not there. Any reasons for IWM huge move? Okay. Any suggestions on long-term 401k? I cannot suggest anything on 401k. Well, I mean, it's not trading, it's investing, right? I mean, if it is for your retirement, who knows what? Think about this. If the market goes up, if it breaks 50% retracement and 61% retracement, we could hit the new highs. That could happen. Nothing is impossible. So if the market, I said this before too, if the market closes about 29.35, it's going higher. Also, one other thing, well, 50-day moving average, where is it? 28.99 is where the 50-day moving average is. Sorry, 29.09. 29.09 is where it is right now. So if that is breached, okay, so if that is breached, we will see a lot of long-term investors come in. I mean, a lot of funds would like to buy when the market is above 50%, 50-day moving average. So the higher it goes, the more buyers it will pull in. That's it.
Is that EMA or SMA?
No. I don't do. I only do EMAs for the day trading for the 5 minutes and 15 minutes, and
Okay.
but more everything else is simple moving average.
Okay.
Any trade ideas around selling option spreads? Well, I'm doing some of them, but I'm still trying to figure out which delta is better. So I am not posting those because I am doing really small, and I'm trying to figure out how the volatility is working for them. I did a few calendar spreads. Well, I mean, in a way they are working, in a way they are not, because instead of making 70-80%, I'm only making 20%, because obviously, with this high volatility, when you expect the market to go towards your objective, it's going much faster, and the short-term option which you sell in a calendar spread is moving much faster, or in terms of percentage, it's going up much higher. So, well, for now, I'm still working on it. And also the butterflies that I've been working on, they seem to give a much better risk reward when there is more uncertainty. So, all right. There is more uncertainty. So, well, as as we do more and more of this, I think we will figure it out. But generally, with a high volatility, right now, this should be one of the easiest ways. By risking less, you can make money. Not a lot of money, but wherever the risk is less, it's always better, to get in there. MOC buying and selling, what does it indicate? I already sent the YouTube video, the Slack, pretty good. How do you spot a particular stock? I already talked about the relative strength. How to long term? Okay, this is all done. I think we are done with the. All right. Let's see.
KP, do you I know you were long Tesla. I didn't follow if you are still long or whatever. But I saw that for BA Tesla, for let's say like 2 weeks back, BA 60 puts were $1.85, $2. If you sell them, I mean, I know you'd be a buyer of BA at 60, right? So I mean, I don't see you using that much, but Tesla, I know you were long at some 300 something, 380s or something. but I could see that some of the options for Tesla, like the puts, like 200, 250s,
Yeah.
a week ahead, were for they were giving like 2.5, 2.8. Selling those, right? Like I'm just thinking, I want to think about different strategies, and I think with your levels and with your experience,
Yeah, one of the best ways to do is right now. I mean, we are not in a downturn anymore, so yeah. Okay, it depends on how far you are selling. Okay, if you're selling like 3 months away from now, I would think that would be a bad idea.
yeah, just a
If
week or two.
yes, if it is a week or two, I would say one week away is probably the best. Right now, you could probably sell 450 because we have a support right there. So let's look at 6 days. Yeah, 450, or let's see what else. This is 500. Huh? Okay, we have actually you can do, if you want to be a less risky, you could sell 450 and buy, I don't know, 300. It doesn't matter where you sell it, but that's probably a good one. And other thing, this one actually helps. Probability of in the money. We have a bunch of, I don't know if you guys use this, probability of in the money or probability of touching. These are kind of, it helps you figure out what is the probability the market is giving for it to, you know, test those levels. So in the money is 4, 5, 6, 7, 8, 9, 10%. So if you sell 500 and I don't know, buy 450, it is not a bad trade at all because there is a 90% probability that you are going to make money. So the thing is, even if the market does not go higher, even if it goes sideways, you will keep making money, and that is based on the theta, of course. So theta is 84. So every day the stock does not move, you make 84 cents. So on Tuesday, if it does not move, this will become less than $3. So, but again, selling options at any time, even though there is less risk, sometimes you might have to adjust it. So it is not for people who are new to trading. That is something. That's why I generally do a spread or a butterfly, which is much easier. But again, I'm not selling them again. But again, this is also, you could probably sell 458 cents. You could get it very, very easily or something like that. You could always do that, and you would do a spread only because that will reduce your margin. But that's what I think. What delta do you pick for call options? Overnight high lows for any chart. How long can you say long term for buying calls? What delta? What delta would you pick for call? Well, generally, for most of the options, I do near the money. Yeah, near the money or at the money, basically. Most of the time. It also depends on the volatility. The volatility is way too high for the stock. I would probably go for a call spread or a put spread rather than, uh, going in naked. You think QQQ will pick up? I know I answered that. There were quite a few flows on IBM early this week. Yeah, I do not follow the flows. So QQQ call January 15 at 50%. Is it good to sell now? I mean 2020. Well, Manjunath, the thing is you need to pick a level, and also this is something I always do in my trading is if you think the market has reached a certain level, sell some. Or if you have only one position, make it a spread. I mean, take some money off the table. The worst thing that a trader can do is not take profits at all when you had a trade going the way you want it to. So, all right. There were a few. Okay, that's done. Okay, KP. Part-time traders like me, what do you suggest? Market downtrend this quarter? I don't carve. I do not know where the market is gonna go. Okay, and I always say I had years where I had certain opinion and I got screwed. So, right. And since then, the only thing I do is I follow the market every day, figure out what's happening. I have my long-term uh, levels and short-term levels. Based on that, I trade. When my long-term levels are not holding, it means I cannot be in the market or buy for my long-term portfolio. I go ahead and buy some hedges if I still want to keep those stocks. The truth is, the only thing I can really help you guys is with the technicals. Okay, and I can explain you how I trade. And I the best thing that could happen for you guys is to learn something from me and see what works better for you. Do you always, is it possible to avoid audio questions? Okay. Do you always set stop loss at what percent below the support? I don't really put any stop losses uh, unless, well, for most of the trades that I post, I don't put stop losses because I'm watching the market every day. So, uh, but again, I have alerts. I have alerts to where I'm supposed to sell because for option stop losses are horrible. You know, there are times when the market uh, has a high volatility day and you will be taken out in seconds and the market comes back. So is it possible? Okay, what do you recommend? Okay, when do you recommend spreads instead of just buying call options? Well, spreads are always better. Well, this is totally up to how much risk you want to take. Spreads are always better. Less risk. Spreads are always better, but you will lose some upside. Okay. For me, uh, when the bid ask spread for the options are far away, that is one time I definitely go for a spread. Okay, and I mean in the options and keep losing the question. Sorry, guys. Okay, and and it also depends on. Well, this question is a little harder to explain because whenever I take a trade, there are so many things actually that's going on in my brain. Okay, and this comes with a lot of trading. For certain stocks, that they are just gonna go higher. There is no hard and fast rule to figure out which one I can do better as a spread or for Apple, right? It moves slowly, so calls are good for me. I don't have to uh, go for a spread at all. So more volume is better for calls. But also whenever I buy call spreads, I put in more money than when I buy naked calls. So, all right. I hope that I answered that question. I mean, some questions are not straightforward to answer. I mean, the answers are not straightforward to those questions. What option strategies for long term do you recommend for current? I can't. I can't. I do it every day at a time. That's it. One day at a time. And as the market moves higher, and as the market moves higher, and as the technicals keep improving, I go in more long term. And whenever I hit my targets, I get out. That's how I trade. Regarding spreads, generally spreads are better when VIX is dropping. Yep. Because, as Raghu said, that's because as VIX is dropping, it does not matter whether your stock is going higher, you will still lose money on the premium on your calls. You could lose money while the stock is going higher when the VIX drops. So, what is your take on crude oil? Well, I bought some USO call spreads. I will probably add more. I bought some June, I think June or July, and I'll probably add more. Uh, my target was around 17 for crude oil. It didn't go to 17. It bounced, and the news is horrible right now. I mean, the crude oil is moving as if it's a penny stock. So, guys, hold on one second. My Bluetooth is not working.
Can you guys hear me? Okay, cool. Thanks. All right, where are we? Crude oil. Or oil related. Well, for long term, right? Okay. For long term, these are the stocks. I mean, I keep sending you the list of stocks that I want to buy for the long term, right? Those are the ones that I will buy. Right now, I don't have anything oil related at all. I still think it's way too risky. I mean, too many factors are influencing the oil market. And if the oil cannot stabilize, I don't know how I can buy oil stocks at all. Can we go over a few sectors like XLE, XLP, and individual stocks like Intel, Visa, Mastercard? You know what? Send the things that you want to, uh, in the chat. I will send you the charts and talk about some levels. Do you always set stop loss? Oh, that's done. Am I reading it again? Oh, below the support. Again, I have alerts there and I sell them, when I think the market is or the stock is not doing good. Are you watching any stocks? Thanks for suggestion, author. SPY same day strangle. I have never did those strangles, so I have no idea. Do you look at the flows at all? No, I don't. What does Raghu mean by option spread better when VIX? Well, when VIX is falling, you would obviously lose the premium of every option. Okay, so even if the stock moves sideways, you will start losing money because the premium is going down. So if you have a spread, the ones that you sold also loses the spread. So that will help you with losing the option premium because of the VIX. What kind of spread do you often prefer? That's what kind of spread do I often prefer? I have no idea. Well, there is one way I look at it is 1:3 or 1:4 is something that I would prefer. I think what I mean is, let's say if you are buying a $10 spread, I do not want to spend more than $3 because in any option, my ultimate goal is to make at least a double. So, and I don't want to wait until the option expires. So, KP, did we talk about current oil situation and its impact on the market in the well, as long as right now, I mean, think about the oil. Nobody is using oil anymore. I mean, it's going down, but also there have been a lot of news, with Saudis and Russia fighting for how much oil they can cut and everything. I mean, there are so many countries that are losing a lot of money because of the current oil price. Well, I mean, if one for many years, oil has been a very important metric for the market to. I mean, what I mean is, in a bullish market, oil always goes up, but there are too many factors right now. Okay, yes. Raghu, how do we know if a specific strike is overpriced or juiced up a lot for options? Well, Pradeep, hold on. What you could do is look at the volatility. Historical volatility. So let me share you this. I think I've shared this a bunch of times in our so this is, I mean, this, I don't have any subscription or anything, but you can use it freely for the last 30 days or last 1 year. This is how the volatility for Tesla. So you look at how the volatility is based on how it has traded. You figure this out, you will know if the volatility is going down or how much has it been used up. But generally, look, anytime there is earnings, what is volatility? Basically, it tells you how much it can move over a certain period of time. That's it. So the ATR is the same thing. How much can it move? So as a average true range, as it goes down, the volatility is going down. All right. Ooh, what happened? Can you guys see anything? Oh, sorry. I think I didn't. Okay, all right. I couldn't able to join you. All right. Look at the chat. Okay. All right. I think we're almost done. Can you explain with an example? Okay, what is she talking? Pradeep, did you understand what I said? Okay. So what I was saying is, look at the volatility for the last few, how the volatility, if you look at this one, okay, oh, you can't see this one, right? Or else, we can look at the average true range. So let's go look at one of them. Okay. So We don't have a historical volatility right here, but oh, sorry, I was surprised. Yeah. So this 86%, that's the amount of move that would happen over a period of, this is only for 6 days, but if it is extended for a year, the market is expected to move 86%. So and this volatility changes not every day, but it either moves higher or lower. But when there is higher volatility, or in the last few weeks, the volatility has come down a lot. So let's see, 30 days, 34 days away, right? This is 100%. So what they are saying is there is 100% of the stock that all of will be moved in the, if this if this 34 days has been extended for a year. Okay, so when this thing starts to go down, it's better to, instead of buying 600, you go buy 600 and 700. So what happens is, when the volatility starts going down, you buy, well, your spread is basically buying 600, selling 700, right? So even though the Tesla does not move, your option value will go down because the volatility is going down. But the 700 option premium will also go down. This is actually making you money. Here you are losing money. So this will reduce your loss because of the VIX move lower. I hope that's clear. How to pick a specific strike price? Well, Gayatri, it depends on how much risk you want to take. Well, I used to do in the money the whole January, but now I'm not doing it because volatility is jacked up right now. So most of the time I do at the money, and if I'm doing long term, I do in the money because I want less theta. So I guess that's all I have. All right, cool. How to pick a strike? Which chart can show long or short ratio volume at various price levels? HK, I don't understand what that means. Long or short ratio or volume at, I have no idea what that means. Can you explain it? Okay. All right. How many are short versus buy? How many are shorted versus buy? Oh, the short interest you mean. Do you mean short interest? Well, there are so many. If you Google them, there are plenty of resources where they show the short interest. I think Bloomberg does it. I think Barron's does it. I think Finviz does it. So, do you have a plan pre-market about market outlook before 9:30, or you take it as you go? Well, we'll know what happens on Sunday. I'll probably make a small write-up on what to expect by 9 o'clock or so. I will try, but I can't promise anything right now. But but we have a plan right now. If the market, yeah, of course, I will always send the levels, but it's pretty straightforward right now. for us. I mean, it's we barely have. If the market moves higher overnight above this 28, 22, or let's see, ES, for ES, actually I think Sunday night the futures might be open. It is obviously, yes, might be. Okay, I was thinking, yeah. So Sunday night we have futures, so we'll know on Sunday what's going to happen. So based on that, if we get a new highs here, 28, about 2809, then it's going higher. So, oh, the February lows. Actually, February lows is something, I don't know if I have that in my, oh, this is the gap I was talking about, right? Yeah, actually about 2800 is something important. And 2800 is also a round number, and so it has some importance. So let's see an hourly chart. Man, something is wrong with Thinkorswim charts these days. I can't see anything. It's supposed to show 180 days. Anyway, so we have a gap from here to here. See, that thing changed to, what is the low? 2844. So that's almost 44 points. So that's the gap we have. All right. Were there any way we could have caught IWM move this week? Was there? Last week, you mean? Well, I had some calendars, but it didn't. Calendars was a very bad idea, which I had some, but as I said, the next week moved much faster than the next month. So again, I did not expect it to break away and move higher. I mean, these things happen all the time, and whatever happened has happened. We need to figure out what happens next. So can it go here and bounce again? So now this is a gap, right? 190.96. So can it come here and go higher? If it comes here and bounces, or even if it comes here, we could probably buy this gap close and see if it holds. That's one thing we could do. IWM. Vijay here. I try to add VOLD. And okay, but my breadth and your breadth is different. Is there a way to show settings? What do you mean, Vijay?
The decline ratio and everything, Krishna, I try to add, but whatever you paste is different from whatever I see.
No. I have a lot of code behind it, so it's the code that does it. Yeah. And I keep changing the code and adding new things. So do you have any trade ideas just for 15 to 30 minutes? Hold us. There is no such thing, Nanda. Okay. This is my question. So let's say if you buy something, if it does not work towards your the way that you expect it to, what do? It's not about how much time it takes. It's about which levels is it breaching or testing. So, and also there is no such thing as a quick trade. The only quick trades which I do are some of the S&P 500 support levels that I test. I post saying that okay, SPY has a support here. So, but those are either it bounces or it breaks, and I don't even keep more than 0.3% or so. or losses, 0.25 or 0.3%. Also, can you explain what your market internals mean by? Okay. Yes, that's what it is. Yep. So it's the decline, advance to decline. This is the volume, right? I mean, how much volume is going higher in NYSE and how much versus how much is going down. Here, four stock volumes are going higher and one is going down. Same with Nasdaq. If you don't mind, can you please explain how do you read or draw lines in the charts? Yeah, Gayatri, I think if you are starting with your technical analysis, the best place is there is something called Chart School in stockcharts.com, which is free. Because it's not something you can explain in a single setting. Because, well, I mean, I can show you where I draw the lines. I would draw a line here saying, okay, this is a resistance, and this is a resistance. Why is this a resistance? Because IWM came here, it failed, it went down. It means this is a resistance, that's it. And the more number of times it happens, the bigger the resistance it is. So here, and not all the time resistance is a single number, or it could be this range. So next time it could just come here, market could come all the way here and break down. So resistance is basically wherever the market or the stock has bounced off, whether it went up and bounced and came down like here, or over here, see it bounced off of this level 3 times. That's a huge support now. Okay, and if market goes up and comes back to this support, let's say 2 months from now, I would go ahead and buy it because that's a support. And if it breaks that support and goes lower, I'm selling it. That's it. Are we done? Any more questions? Can you guys hear me? All right. Well, I guess that's it. Let me see if I have anything in my notes that I would. Well, I told you that I would be interested in buying some long-term options, and we talked about the gap fill and bounce, and regarding technology, right? One thing that was not very encouraging was that SMH, it couldn't move higher, and we had, that's a bearish engulfing pattern. So we will see where this goes. I mean, right now, market cannot move higher without semis. They have become the backbone of everything. I mean, you have chips in everything these days. So this is something I would be watching. I guess that's it. All right, thank you guys.
Thank you.
Hold on.